Hello everyone, this is Sia Bijit Misra and welcome to this new video. In this video, I am going to discuss about the types of stock. First of all, why we need to understand about the types of stock. Different types of stock normally having a different characteristics and also they perform in a different manner or separate manner. So due to that, we need to understand about the different types of stocks that are available in the market. So let's discuss about the category number one, that is basically your growth stock. What is growth stock? Growth stock refers to the equity expected to grow at a faster rate compared to the broader market. What is the meaning of broader market? Nifty 50. Nifty 50 is basically the broader market for India. So in the first sentence, what we understand, growth stock are those stock who give much more better return than the Nifty return. If the Nifty is growing at a rate of 15% per annum, then the growth stock normally grow at a percentage more than like 15%. It may be 16, it may be 20, it may be 30, it may be 40. Second thing, growth stock tend to outperform during the time of economic expansion and when the interest rate are low. So for this, you can take the COVID period example, like post 2020, 21 and 22. This is basically the period where the economic growth was happening in a rapid pace, and second thing, the interest rate was low. So at that time, many growth stock they have given huge percentage of return. So that is all about the second characteristics of the growth stock. Example, Bajaj Finance, Deepak Nitrate, they are into the specialty chemical. Same manner, Avanti Feeds, they all are some of the examples of the growth stock. Note, normally growth stock grow at a faster rate during the economy recovery and vice versa. That means if there is a economy growth is happening or economy recovery is happening, that time growth stock give massive return and vice versa. That means if economy recession is happening or economy is getting slowed down, in such a case growth stock behave or growth stock fall like anything. So again, I am just repeating, what is growth stock? Growth stock normally give a return more than the Nifty 50 or broader market. Second thing, during the time of economic expansion or interest rate low, growth stock increase a lot or give a massive return. Why? Normally at the time of economic expansion, a lot of hiring happen, a lot of production happen, a lot of economic activities happen. Due to that, people are having huge amount of money or they have the money in their hand. So due to that, what happened actually, and also if the interest rate is also low, at that time they are having also a good amount of money or the money is available at a cheaper rate. So due to that, this normally what happened actually, many people they spend a lot, and that impact normally we see in a growth stock. Let's come to the second page, we'll understand. This is one of the example of Bajaj Finance Limited, which is a growth stock. If you come here, if you come to the 2022's area, you can see here. So during 2022, during that COVID period, a fall happened. This is basically, I'm just Bajaj Finance stock, this one, and also I'm comparing with the Nifty 50. If you see in Nifty 50, a small fall has happened, but in Bajaj Finance, how much fall has happened? Why? Because Bajaj Finance is a growth stock. During the time of economic slowdown or recession, the majority impact or the majority hit will come to the Bajaj Finance. You can see here, the Bajaj Finance has fallen drastically. Second thing, post 2022 COVID period, normally the recovery happened during this period, and then after the growth happened, and also the interest rate was very low. During that time, you can see a massive outperformance has happened in Bajaj Finance. You can see when the Nifty has given only 80% return, at the same time Bajaj Finance has given around 650 or 680% return. Just compare, it is more than 6 to 7 times than the Nifty's return. So this is basically the first characteristics of the growth stock. So what is the best time to invest your money in the growth stock? Whenever there is a economic slowdown is happening and we are already at the bottom, so at that time you can accumulate, and if you can accumulate and if you can find the proper bottom, in such a case it will give massive return 400%, 500% like that. Same manner also, whenever there is a small correction, at the time also you can invest in the growth stock. This is all about the growth stock and the characteristics of growth stock. Second category. The second category is basically value stocks. What is value stock? Value stocks tend Value stocks trade at a discount to what company's performance might otherwise indicate, typically having more attractive valuation than the broader market. What basically we are trying to say? Value stock is normally trade at a discount to its actual value. If a stock's like indicative value is 100 rupees but it is trading at around 80 rupees, that is basically called as value stock. That means we can see a proper value कि भाई stock का मतलब और थे around 100 rupees but it is trading at 80 rupees. That is basically called as value stock. Example of sectors, एक है financial like banking or financial services, second is healthcare, third is FMCG, and fourth is energy. Normally they outperforms during the time of economy recovery. So what happened actually whenever there is a value stock, so take the example, the first impact come to the financial like sectors at the time of economy recovery. Same also FMCG is something a stable industry, whether you are eating, whether you are like what I can say, whether there is economic slowdown or what I can say recovery is there, you are going to brush your teeth, you are going to use soap, you are going to eat the oil, etc, etc. So due to that like impact does not come to the value stock. So example of some of the value stocks, HUL, Colgate, Coal India. Remember, value stock is basically what? Value stock is basically a stock which is available at an attractive value or which is available at a discount to its actual value. If the indicative value of a company is around 100 rupees and it is available at 80 rupees, that is basically called as value stock. When to invest in the value stock? You can invest at any time in the value stock because always the stock will be available at a discounted price. So due to that you can invest at any time. And third thing basically they are basically stable stock and they can basically protect your portfolio during a downfall. We'll see that one. This chart basically showing the comparison between Hindustan Unilever, which is basically a stock belonging to the FMCG sector, with Nifty 50. If you see here, during the 2020, a massive fall has happened in the Nifty 50. Okay, but at the same time, if you see Hindustan Unilever, there is no massive fall, max to max around 10% fall, which is very little, very minimal. And then after, whenever there is a economic outperformance happened post the COVID, you can see the Nifty 50 has grown like anything. At the same time, HUL has grown at a good pace. You can say like that, and it's not like or it has not grown more than the growth stock, but still there is a good growth. That is all about or all the characteristics of value stock. Now third stock is basically income or dividend stocks. Example, equities that are provide regular income by distributing company's profit, that is basically called as income / dividend stocks. They are having low volatility. They don't like fluctuate a lot, like today 100 rupees, tomorrow 150, then after 200, then after 100. This does not happen. And third thing is basically less capital appreciation versus the growth stock. As the main motto of investing or of the investors to invest in this company is to earn dividend or income. So due to that, normally they don't trade a lot. So due to that, normally there is no like huge amount of capital appreciation as compared to the growth stock. Fourth is basically suitable for the risk-averse investors who seek regular income stream. So take the example, I am an investor, I don't want to take a lot of risk. I simply want to put like 100 rupees and every year if I can earn like 5 rupees, then that is enough for me. And I don't need a huge amount of capital appreciation. If 100 rupees is becoming 105 also, that is enough for me because I am getting a dividend of 5 rupees. So for those investors, this is a good option to invest in the dividend stock. And examples are basically National Mining Development Corporation, NMDC, IOCL, Coal India, SAIL, etc, etc. So remember one thing, so the income or dividend stocks are basically those companies who are owned by government, so or PSUs. Normally what happen actually, government need the money as they have invested the public money in these companies. So government wants to take some portion of the profit from the company. So due to that, what happened actually, normally as government is the major stakeholder or shareholder, so due to that they normally declare a lot of dividend, and that benefit normally we get. So remember one thing, you can invest in this company only when you have the intention to earn a good amount of dividend or regular income. That is all about the income dividend stocks. Some of the example you can see here, NMDC, National Mining Development Corporation, it has given 11.5% dividend yield. That means if the market value of the share is like, if you can see here, 128, and it is giving a dividend of around 12 rupees. That is around good amount of money. Same manner IOCL 10%, 10.2%, Power Finance Corporation 9.89%, Cell 8.79, Coal India 8.68. They are giving massive return, massive like dividend, you can see. So this is all about the income or dividend stocks. Fourth categories of stock, talk of the town, you can say, the blue chip stocks. Now, everybody will say, I am investing in the blue chip stock. But what is the blue chip stock? So blue chip stocks, they are basically well established companies that have a large market capitalization. So who are the blue chip stock? Take the example Hindustan Unilever. Is it an established company? Yes. Is it having a large market capitalization? Yes. So second thing or second characteristics, they have a longer successful track record of generating dependable earning and with their industrial sector. Okay, so basically what they're trying to say, and you can say one other thing, an example basically all the Nifty 50 companies. So blue chip stocks are basically the top top 50 or top 100 or top 200 companies who have a established like track record, and they are belonging to the large cap, and also they have a long successful track record. Example Hindustan Unilever, Reliance, Airtel, State Bank of India, HDFC Bank. They all are having established companies, and they are belonging to the large market capitalization or large cap companies, and they have a long successful track record. So due to that, normally we call it the blue chip companies. Now I hope you understand about the blue chip companies. And the fifth category of stock or types of stock, that is called as cyclical and non-cyclical stock. What is the meaning of cyclical and non-cyclical stock? Cyclical stocks are directly affected by the economic performance and typically follow the economic cycle of expansion, peak, recession and recovery. So cyclical stock basically follow the economy. Whenever there is an economic expansion, normally they outperform, and whenever there is a peak, normally they slow down. Whenever there is a recession, they fall like anything, and whenever there is a recovery, also again they start like giving a good amount of return. They usually display a more volatile and outperform other stock in the time of economic strength, when consumers have more discretionary income. So examples, those who are belonging to the restaurant sector, hotel chains, airlines, furniture, high-end clothing retailers, automobile manufacturers, steel and construction. So what happened actually in case of cyclical stock, I can give an example. So if you see right now, take the example right now, like the sugar. So India has the banned export of sugar. That means at the global level, so there is a huge amount of demand for the sugar, and there is no suppliers available in the market. So due to that, what is happening basically, we can tell in case of sugar industry, the sugar industry, what happened actually last 4-5 years, if you see, they have not outperformed, or they have not performed at all. It may happen if the demand for the sugar is increasing drastically and the supply is not there. So due to that, what will happen actually, one year will come where the cycle will change. The demand supply cycle will change. The sugar's demand will increase drastically. Due to that, the sugar industry stocks will outperform like anything. Example. So the best example is basically Tata Steel. So here the same thing, I have compared the Tata Steel with the Nifty 50s like performance. If you see here, what happened actually post COVID, a sudden demand increase in the economy, as everything was stopped, everything was nothing was happening, and immediately in the month of May or June, everything is started. So industrial activities get started. So due to that, what happened actually, there is a boom happening in the entire world, and basically there is a shortage of iron ore, and steel demand is there because steel is the backbone of the entire industry. At that time, what happened, you can see Tata Steel has given a massive return. It has grown from the 100% to like 280. You can say around 200% return. Why it has given? Because the cycle change. If you see the Tata Steel in 2017 to 2018, there is a cycle. There is demand like supply cycle, what happened actually, demand was much more higher than the supply, or more industrial activities were happening. And if you see here in 2018 to 2020, what happened again, the supply become high and the demand become low because of China's like what I can say export, or that like anti-dumping activities, and many things are there. So due to that happened. So there is a basically a up cycle, there is a down cycle, and again you can see here there is a again up cycle in the steel industry. And during that time you can see the steel industry has outperformed like anything. So the cyclical industry, what happened actually, remember one thing, in cyclical industries are best good for trading purpose or swing trading purpose. That means you can purchase at the bottom and you can sell at the high. Same way you can purchase the bottom and you can sell at high. Remember one thing, the cyclical industry are not a good investment opportunity if you want to invest and forget. So remember one thing. Second thing, when you will you should invest in the cyclical industry, first of all, if you have an understanding in the cyclical industry, then only you invest. Otherwise you will lose the money, or you will block the money for a long period. Second thing, whenever the cycle is basically getting started, the demand is like pushing, at that time you should invest so that you can earn a good amount of return. So that is all about the cyclical and non-cyclical stock. So the next category of stock is basically defensive stocks. So what is defensive stock? So defensive stock generally provide consistent return in most economic conditions and stock market environments. These companies typically sells essential products, services such as consumer staples, healthcare and utilities. Defensive stocks may help protect a portfolio from steep losses during a sell-off or bear market. Example, Hindustan Unilever, Avenue Supermarket, TCS, Infosys, etc. What is the meaning of defensive stock? Defensive stock is basically stock of those companies who sell all the essential goods. Take the example, in the morning when you wake up, you will like what I can say, clean your teeth. So that is whether the economy recession is happening or economic recovery is happening, you don't care, you don't bother. You will take a bath, you are going to use the soap. Same manner, you need the grocery, you need to eat the food. So example, even Hindustan Unilever, whether demand is there or not there, little bit impact may come to them, but it's not a hell lot of impact. Same manner, Avenue Supermarket, DMart, whether there is a recession, whether there is a recovery, you don't know whether there is a COVID or not, you need to eat your food. Due to that, you have to travel to DMart. So due to that, what happened actually, these are basically the called as the defensive stocks. So why you have to invest in the defensive stock? Defensive stock basically protects your portfolio. If some recession is happening, something is happening, a stock market is falling or anything, defensive stocks are those stocks who will not fall. I have already given the example. You can see in 2020, at the time of COVID, when all the stocks were falling, at the time HUL was not falling at all because it is a defensive stock. Whether COVID is happening or not happening, I am going to use the Lifebuoy. I am going to use the Pierce Dove soap. I am going to use the toothpaste called Pepsodent. I am going to use the chai called like many chais, that Red Label or something, the brand. So that is because that is basically called defensive stock. So that is all about the defensive stock. And the next stock is, or last stock is basically penny stock. For penny stock, there is no proper definition. It differs from person to person. So remember one thing: stocks having a lesser value, stock having small market capitalization, they are highly speculative and they are very risky. So what is the penny stock? Penny stock are very risky. They are highly speculative. They can increase like anything and they can decrease like anything. They have less value. They trade at like 5 rupees, 10 rupees, and market share is basically 1000 crore, 500 crores. So due to that, what happens actually, anybody can change them or anybody can manipulate them. So what is the strategy to put the money in the like penny stock? First of all, if you understand the fundamental, then you can choose. If you believe in the fundamental of one of the penny stock, then you can invest. But second thing, if you are putting 1 lakh rupees in the penny stock, you should divide in the 10 bucket and you should allocate to the 10 companies. So if 8 companies are getting delisted or we're losing the money, at least in 2 companies we can earn a good amount of profit. So that is all about the different types of stocks that are available in the Indian market. So please have a look and please understand that one. And thank you so much for watching. Please like, please subscribe, and just share this video to all of your friends. So thank you so much for watching. Bye bye.